Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is June 3rd, 2025, and we're diving into Hewlett Packard Enterprise's latest earnings report for the second quarter of fiscal year 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Hewlett Packard Enterprise's performance today.
Let's get started with a brief introduction to the company. Hewlett Packard Enterprise, or HPE, is a global technology leader focused on developing intelligent solutions that allow customers to capture, analyze, and act upon data seamlessly. They innovate across networking, hybrid cloud, and AI to help customers develop new business models and increase operational performance. Revenue and profitability overview. Let's start with the top line. Hewlett Packard Enterprise reported a net revenue of $7.6 billion for the second quarter, which is a 6% increase compared to the same period last year. John, can you shed some light on this?
Absolutely. The revenue growth is quite impressive, especially in a challenging macro environment. HPE's focus on their core segments like server, intelligent edge, and hybrid cloud has paid off, with each showing year-over-year growth. The non-GAAP gross margin stood at 29.4%, which, although down from last year, remains stable sequentially.
And what about their earnings per share?
HPE reported a non-GAAP EPS of 38 cents, which is above their guidance range of 28 to 34, and also above the analyst forecast of 28 cents. This indicates strong operational performance despite some headwinds.
Segment performance and strategic initiatives. John, let's delve into the segment performance. How did HPE's different business units fare this quarter?
The server segment generated $4.1 billion in revenue, up 6% year over year, but the operating profit margin decreased to 5.9% from 11.0% last year. Intelligent Edge saw a 7% increase in revenue to $1.2 billion, with a healthy operating profit margin of 23.6%. Hybrid cloud was a standout, with revenue up 13% to $1.5 billion and a significant improvement in operating profit margin to 5.4% from 1.0% last year.
It seems like hybrid cloud is a key growth driver for HPE. What strategic initiatives are they focusing on?
HPE is heavily investing in their hybrid cloud offerings, aiming to capture more market share by enhancing their cloud services and solutions. This focus is part of their broader strategy to drive innovation and operational efficiency across all segments.
Cash flow and capital returns. Let's talk about cash flow and capital returns. HPE reported a negative cash flow from operations of $461 million and a free cash flow of negative $847 million. What does this mean for the company?
These figures indicate some challenges in cash management, primarily due to increased investments and operational costs. However, HPE returned $221 million to shareholders through dividends and share repurchases, showing their commitment to shareholder value. They also declared a regular cash dividend of 0.3 cents per share, which is a positive sign for investors.
How should investors interpret these cash flow challenges?
While the negative cash flow is a concern, it's important to consider the context. HPE is investing heavily in growth areas, which can strain cash flow in the short term, but potentially lead to long-term gains. Investors should watch how these investments translate into future revenue and profitability.
Future outlook and guidance. Looking ahead, what guidance has HPE provided for the next quarter and the full fiscal year?
For the third quarter, HPE expects revenue between $8.2 billion and $8.5 billion, with a non-GAAP EPS of 40 to 45 cents. For the full fiscal year 2025, they anticipate revenue growth of 7% to 9% and a non-GAAP EPS between $1.78 and $1.90. This guidance reflects their confidence in continued growth and operational improvements.
What are the key factors that could influence their future performance?
Key factors include their ability to execute on strategic initiatives, manage costs effectively, and navigate the macroeconomic environment. Their focus on innovation and expanding their cloud and AI offerings will be crucial in maintaining competitive advantage and driving growth.
Key takeaways. In summary, Hewlett Packard Enterprise delivered a solid performance in Q2 2025, with strong revenue growth and an EPS that exceeded expectations. Despite some cash flow challenges, their strategic focus on innovation and operational efficiency positions them well for future growth. John, any final thoughts?
HPE's commitment to innovation and shareholder value is evident in their results and future outlook. Investors should keep an eye on their strategic initiatives and how they manage cash flow in the coming quarters.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on HPE's performance in the comments below. Until next time.